Let's start with the markets, as we always do on NYSE Live. Joining me now with more is resident expert Jay Woods, chief market strategist at Freedom Capital Markets. We see Jay often on the show and on the trading floor. Jay, it's good to see you.
Good to see you.
A lot to talk about this morning, and let's talk about where the futures are trading. We're looking at a loss of more than 1% on the S&P. What is behind this?
Yeah, well, it's tariff war part two. We didn't expect a new set of tariffs going against our European allies. And now, with all I said on Davos, it's not that economic forum where we're going to talk about great innovation and climate concerns. We're going to talk about major geopolitical concerns that will move the market. So Trump speaks tomorrow at 8:30. All eyes will be on that. But for now, we have a new layer of uncertainty. And what we do when we get that is we sell off. So we watch levels. And the S&P 500 and the Dow. Last week we were looking for milestones, 7,000 and those 50,000 level in the Dow. Well, we have to put the champagne on ice for now. And the one level that has me concerned is the NASDAQ 100. We talk about technology. That looks like it's rolling over. But what traders are watching, watch the 50-day moving average. It looks like we're going to test those right out of the gate in the S&P and the Dow. And if we get a little more weakness, watch the 100-day moving average. We don't talk about that a lot. I'm going to look at my notes to give you the exact level. But in the S&P 500, it's 6740. We have not closed below that level since May 12th when we broke above it. We tested it once in November. If things get a little more precipitous to the downside, then these are the levels that every trader here is going to keep their eyes on and see if it's another one of those, taco trades, or is this a little more significant? So that's the level in the S&P. We're watching that 100-day moving average.
You followed the patterns, Jay, clearly. Does it seem as if there is a pattern forming, almost that it's deja vu, right? This time early last year, we saw President Trump take hard rhetoric on tariffs. Then, of course, eventually pulled back as the market did briefly dip into bear market territory. Could we see that play out this year?
Well, to try to find a pattern on the president and which way he goes is one of the more challenging tasks. I don't think his own administration can keep up with the news. We were talking Venezuela. Remember that just a week ago? And there were other things we haven't talked about in quite some time. Don't want to go deep in the political spectrum here, but we have potential conflicts with China, Taiwan, Russia, Ukraine still there. Energy was in focus last week, and now we're talking tariffs, we're talking housing issues. I mean, there's something every day. So I'm just going to watch the major levels and the major indexes and watch sectors. Sector rotation last week, 6 of 11 sectors were higher, but the sectors that led us, energy, materials, aren't the sectors that are going to lead the overall index higher. And when we see weakness in technology, now communications, and a little weakness in discretionary, that will take the market lower, even though the overall breadth has been slightly positive.
And we are expecting, at least the estimates show, right, a decent earnings season from the S&P 500. We'll get more big reports this week from NYSE-listed companies like J&J and Abbott. What's on your radar there?
Yeah, there are a lot of stocks. 35 S&P 500 stocks next week is when it really kicks off, and 4 stocks in the Dow. You mentioned well, I'm going to put J&J, but Procter & Gamble is one I'm watching because that's one of the biggest consumer staples out there. Procter & Gamble has been mired in a downtrend going back to last January. 138, a key level to watch there. It's trading around 143. Let's see if that can turn things around. Staples are usually a sign of, pockets of strength in weaker times, so we may catch a bid there. 3M reported this morning. They beat, but the stock's trading off. More tariff concerns there. I'm watching 160 on short-term support, 155 long-term support. Maybe an opportunity for people to get in. And then Netflix, that deal will usurp any news that we see as far as, how many people are actually subscribing. They don't give their sub numbers anymore. But Netflix is sitting at a key support level. Let's see if it can hold.
It's interesting because commentary on the Fed, at least from the White House, and Trump has cooled the past few days, yet we are going to get a key inflation report this week and a Fed decision at the end of January. What about this inflation report matters?
Yeah, well, PCE is the Fed's preferred inflation gauge. We say this all the time, but what we just don't want to see it tick up. We've been getting good inflationary data that things have finally leveled off. And Jerome Powell, we used to talk a year ago about, is he going to land the plane? what's going to happen. Well, the plane never really officially landed getting that 2% mark, but what it's done is stabilize. And the market has been making new highs up until last week. So to me, Fed policy is probably baked in. We're not going to get a cut, but if we can get cooler numbers on the PCE, that will lead to more talk of a potential cut down the road. I don't think that's going to be the talk when it comes to we're waiting to hear who the next Fed chairman is and then what's going on politically between Chairman Powell and the president as far as this ongoing potential litigation against him.
Okay, so big picture, Jay, in about 60 seconds. We saw investors build their positions earlier this year. Now we see a pullback in the markets. Is this a sign perhaps of a pause to come, more volatility ahead? What would you think?
Right now, definite pause, slight concern. The rotation is usually healthy, the lifeblood of bull market, but the sector rotation that's leading us is late-stage bull cycle. We want to see technology find a floor, and right now the technology names, Apple breaking down, Microsoft not looking good, NVIDIA stagnant. These three names that really helped lift us, we need them to just kind of go sideways for a little while. The other sectors move up, but you know this tariff war, we got to keep an eye and see if this is an opportunity to buy the dip or something more. We do get 3-5% corrections a year. It looks like we're in the midst of one right now.
All right, Jay Woods, Chief Market Strategist at Freedom Capital Markets, joining us this morning here in studio. Jay, thank you.
Thank you.
Yeah.